Hello and welcome. If you're a homeowner in England, you really need to listen up because your council tax bill could be about to change, and I mean significantly. To help you navigate what's coming, the experts at Pro Tax Accountant have put together this essential briefing on the council tax reboot. We're going to break down exactly what's happening and, most importantly, what it means for you. So let's just cut straight to the chase. The big question on everyone's mind is, are you about to get a brand new tax bill slapped on your home? Well, for a growing number of people, the answer is a definite yes, and it all comes down to one single number. And that number is £2 million. If your property is valued above this figure, you are sitting right in the path of a major new property tax reform that's about to shake things up. To really get our heads around this, we're going to cover 4 key things. First, what this new surcharge for homes actually is. Second, why the current council tax system is considered so outdated. Then we'll get into the nuts and bolts of how the new tax works. And finally, the big one, the real-world impact this is going to have on homeowners like you. Okay, first up, let's talk about this new surcharge. The official name is the High Value Council Tax Surcharge. But let's be honest, you'll probably just hear everyone calling it the new mansion tax. So what is it exactly? Well, put simply, it's a new annual tax that gets charged on homes in England, valued at over £2 million. And here's the crucial bit. It's paid by the homeowner, not a tenant, and it is an extra charge right on top of the council tax you already pay. Here are the key details at a glance. This was all announced in the November 2025 budget. It's specifically for homeowners in England whose properties are valued over that £2 million threshold in 2026. Now, you won't actually see it on your bills until April 2028, and the government expects it to bring in around £0.4 billion by the 2029-30 tax year. So that's what's happening. But it really begs the question, why now? What's the big push for this reform? Well, to understand that, we need to take a quick look at why the current council tax system is frankly seen by many as being completely broken.
And here is the core issue laid bare. Can you believe our council tax is still based on what properties were worth all the way back in 1991? It's mad. The new surcharge, however, is all about current market value. It's a massive shift from a broad, banded system to one that's laser-focused on properties over £2 million, trying to tax that property wealth more directly.
And you don't have to take my word for it. This quote from the government itself really highlights how absurd the old system has become. The idea that a regular family home in Band D can end up paying more in council tax than a £10 million property in Mayfair, well, that's exactly the kind of thing this reform is designed to tackle. Now, this isn't just some random new tax idea they've pulled out of a hat. It's actually based on a pretty old economic idea called the land value tax principle. The thinking goes that a lot of a property's value comes from community investments, things like good schools, parks, transport links, and not just the bricks and mortar. The surcharge is really a step towards taxing some of that value that the community itself helped create. Okay, so we've covered the what and the why. Now for the part everyone really wants to know. The practical details. How is this new tax actually going to work? Let's break down the bands, the timeline, and that all-important valuation process.
Right, here are the numbers you need to know. The surcharge is tiered, so if your home is valued between £2 and £2.5 million, it's an extra £2,500 a year. That rises to £3,500 for homes up to £3.5 million, then £5,000 for homes up to £5 million, and it tops out at £7,500 a year for any property valued over £5 million.
And here's how this is all going to roll out. We had the announcement in late 2025. Then, and this is really important, there's a public consultation in early 2026. The valuations start later that year, but, and this gives you some breathing room, the first payments aren't actually due until April 2028, giving homeowners a bit of time to prepare. And here is a pro tip from the team at Pro Tax Accountant. That public consultation in early 2026 is your chance to have your say. This is where the really crucial details, like how an appeals process might work or how payment deferrals could be structured, will all be debated. It's a key opportunity for you to help shape the final rules. Don't miss it. So how will they even know your home's value? Well, they're not going to revalue every single home in England. Instead, the Valuation Office Agency, or VOA, is going to conduct a targeted exercise to find properties that are likely to be over that £2 million threshold. They'll be assessed at their 2026 market value, and, crucially, this whole process will be repeated every 5 years. That's to stop the system from becoming outdated all over again.
Okay, so we know how it works in theory, but what about the real-world impact? This is where things start to get pretty controversial. Let's dig into the effects on homeowners and what this might mean for the wider property market.
The single biggest criticism is what's known as the asset-rich, cash-poor problem. Let's picture someone. Let's call her Sarah. She's a retired freelancer in London. She bought her home 30 years ago, and now, just through the market going crazy, it's worth over £2 million. That sounds great, right? But she's living on a modest pension. Finding thousands of extra pounds for this tax every single year would be a massive, massive strain.
And this leads to the next obvious question: can you defer the payment? Well, the government knows this is a huge issue, and they are looking at a deferral scheme. This would likely let homeowners roll up the tax each year, with the total bill only being paid when the property is eventually sold. This is one of the most critical things to watch out for in that 2026 consultation. And just look at this chart. You can see how geographically concentrated this new tax is going to be. The vast majority of all affected homes, we're talking around 85%, are expected to be in London and the southeast. The impact on the rest of England is actually pretty small in comparison.
Now, stay with me, because here is a detail that might surprise you. Did you know that social housing properties will be completely exempt from this surcharge? And that's true even if a property's market value, especially in some prime London spots, is well over that £2 million threshold. An interesting little detail, right?
Okay, that was a lot of information to take in, I know. So let's just pause for a moment, slow down, and summarize the absolute key takeaways and talk about what your next steps could be.
So to recap the absolute essentials, a new annual surcharge is on its way for homes in England valued over £2 million. The cost will be somewhere between £2,500 and £7,500 a year. The valuations are based on 2026 market values, with the first payments due in April 2028. A really vital payment deferral scheme is being considered. And finally, keep an eye on the property market, because we might see prices start to bunch up just below these new tax thresholds.
Which really leaves us with the big final question. Is this a fair tax on property wealth? Something that's just designed to fix a broken, outdated system? Or is it the thin end of the wedge, a new tax that could eventually expand to affect even more homeowners down the line? That, right there, is the heart of the whole debate.
And just a quick but important disclaimer: all the information we've shared here is for general guidance and is based on what we know in late 2025. Please don't rely on it by itself when you're making important financial decisions.
For advice that's tailored specifically to you and your situation, it's always best to speak with a tax expert. You can reach the fantastic team at Pro Tax Accountant directly on WhatsApp or by phone at 0798-568-9912, or you can just pop them an email. Thanks so much for joining us.